Hi, my name is Denise French, and I'm a divorce financial expert and financial advisor focusing specifically on those before, during, and after divorce and the special financial needs we have as we're walking through that. This week, I want to talk to you about restricted stock units and what they mean for you during the divorce and after the divorce. We had several clients come in this week with questions on A, I have these, do I get some of them in the divorce? And then B, people who have had them after the divorce as the non-employee spouse wondering, what do I do with these? So a restricted stock unit is a form of compensation given to higher level executives or employees that are highly valued at a company. Now, instead of receiving cash in the form of a paycheck, as part of their compensation, they receive additional compensation as a restricted stock unit that's paid out at a certain date. So a couple different things go on with these stock units. One, they're a unit of stock. So for example, ExxonMobil regularly and frequently has these. So it's a unit of ExxonMobil stock. You don't own it yet, it's restricted. It's given to you on what we call the grant date. So the date you are granted the unit is the grant date. Then there's a vest date, and that's the date you actually get to take hold of these, where you can cash them out and do something with them or put them in your own account. So the difference between the grant date and the vest date could be varied depending on the different company. ExxonMobil tends to do it in 3-year or 7-year tranches, but they have different mini tranches inside of that sometimes. So you have the grant date and you have the vest date, which will be different at any different company. Some of these are vested on a monthly basis for a period of years. Some of them have just a cliff vesting at the end of 3 years, boom, they're granted and they become immediately yours, which is often what we see with ExxonMobil plans in specific. So grant date, vest date. Now, what if I'm getting divorced in the middle of the grant date and the vest date and there's years in between the two? That's where there's a formula. There's a formula for that, as we like to say in the accounting world. So actually, the Texas Family Code has an actual formula for that, for units that were granted before the date of marriage and for units that are vested after the date of divorce. So it's a mathematical calculation. It's fairly complex. Please talk to your advisor, please talk to your lawyer about these. Your family law attorney can give you guidance on where to go to calculate these. Some family lawyers just calculate them themselves. It is a formula literally found in the Texas Family Code to be used and to be followed. But the basic mathematical calculation is it's a symphony of the day you were married, the day you're getting divorced, the day of mediation, the day of trial, whatever your attorney says is your date of division, and then the grant date and the vest date. And the closer the grant date and the vest date are to being in between the date of marriage and the date of divorce, the more of this is divisible, the more of it is community property, is the bottom line. It's more complex than that, and it is a mathematical calculation, but it can be done by any financial expert focusing on divorce or a family law attorney. So what happens, you've got these awards that you have on your marital inventory. So again, even though you haven't been able to take possession of them yet, you can't take them, cash them out, and buy groceries with them, they still probably have a community property portion and are divided when they're vested down the road. So let's say now you've gone through the divorce, you had RSUs that you were given in the divorce, and now the vesting is starting to happen. So what do? Well, the spouse that works for the company is a fiduciary for you, typically, per your divorce decree. So your employed ex-spouse who's still working for the company has a duty to give you the shares you were awarded. You can take them in one of two ways. You can take them as shares put into your brokerage account, or you can take them as cash put into your bank account. So you can tell your ex-spouse to cash them out and send them to your bank, or you can give them your brokerage account information and the company can send them to your brokerage account. Now, one thing to be aware of is that taxes are going to be taken out of these. So if you are given or awarded 100 shares of a company restricted stock units, when those come to vest, you may be upset because you only received 70 of them. Well, that's because taxes were taken out. So the employee spouse, the person who remains at the company, is the only one who can take hold of these shares. As such, they have to pay 100% of the tax on them. So if you are the non-employee person, you will receive these shares net of that taxation. And the taxation rate is usually spelled out in your decree. You can ask your financial expert in divorce about that. Certainly talk to your attorney about that. They will have opinions on what rate to use. It's typically the highest marginal bracket of the spouse who's still employed. So let me sum up where we're at now. You have these things called RSUs, restricted stock units. You're not sure what they are, but you know that they exist. I'm here to tell you that a portion of those, even though you haven't received them or your spouse who's still employed has not received them, may still be an asset that you divide down the road. In addition, there's a taxation part. So if you are the employee spouse and you're worried, gosh, I'm going to pay all the tax on this, and my ex-spouse who's not working here, I have to give her part of it or him part of it, whoever's not working there. Well, the taxation, you'll be able to take all the tax out first and then give them the shares net of taxation. So that gets worked out in these divorce decrees as well. So now vesting date has come. I'm divorced. I have shares that just vested. What do I do? Well, again, you can take them in stock or you can take them in cash. What I think is critical, and what actually came to fruition today with actually 2 different clients of ours, was, oh my gosh, I haven't been keeping track of these, and my financial advisor wasn't keeping track of them. That's an issue. So when you work with someone after divorce, we encourage you to work with someone who's familiar with how these divorce decrees work and how contingent assets work years after you've been divorced. For our clients, we keep track of these. So we literally have a spreadsheet, because we like spreadsheets here. We have a spreadsheet of each client that has contingent awards coming to them, the dates in which they vest, and the approximate amounts. One other thought on these RSUs. Quite often, these companies will pay a dividend. Frequently, it's paid quarterly, but not always. Just because your shares aren't vested doesn't mean you don't have a right to that dividend. The rules are different for different companies, so you have to check the agreements from which these awards were granted. They all have agreements. So all grants have some form of formal agreement that has been signed by the employee. In those agreements, they will typically state whether they pay a dividend on unvested shares or not. But if they do, and you as someone who has is the non-employee spouse, you will receive, or you should receive, dividends throughout the years, even after the divorce is over, on shares that are unvested. And of course, if you're the employee spouse, then you'll have to be paying those out typically on a quarterly basis to your ex-spouse after taxation has been paid. So that sums up restricted stock units. They're a form of executive compensation. They are typically given out at oil and gas companies. A variety of them are given out at many different financial firms. Lots of industry use specifically restricted stock units, RSUs, or if they're not called that, it's the same concept called something else. It's compensation given to the employee in the form of stock, or if it's not a publicly traded company, they're privately held shares, and paid to an employee down the road for performance over a period of years. Part of those are community, part of those are separate property belonging to the spouse who is the employee. Typically, only the employee can take hold of those, so your lawyer will write in specific wording to protect both the employee spouse and the non-employee spouse down the road and how to receive those. I hope that's been helpful. Click the link below to schedule a free 30-minute consultation. If you have something like this or these in your divorce or that you've been given from a past divorce, or you're facing a current divorce and you'd like a discussion about them, we'd be happy to chat with you. Thanks.